Insider tips on pitching to investors. So first, to begin with, some housekeeping items. So as we've done with previous sessions, this one will be recorded and posted for future viewing along with a copy of the presenter's slides. And because we have a large audience, everyone's phone right now should be currently muted. And please don't put the webinar on hold if you've dialed in through your telephone. If you do that, then we're all going to hear your hold music or the recording for your campus, and that's not something we want. I will tell you, though, that even though you're on hold, you can use your chat feature to pose questions during Noelle's presentation, and that's on the right-hand side of your screen, and she'll be able to see those, and she can respond to them in real time if she wants, or we can wait to the end and kind of go through them. So, again, your phone should be muted. Please don't put us on hold. Use the chat feature if you'd like to pose a question during the presentation. And then at the end of the presentation, we will unmute the lines, but you can also press #5 to unmute your phone. And we'll reserve about 15 minutes at the end for Q&A, so you'll have a chance to speak back and forth and pose questions and comments based upon the presentation. So our speaker this afternoon is Noelle Goddard, and Noelle is the founder and CEO of Goddard Labs, as well as a principal at Accelerate New York Seed Fund. She's a frequent venture competition judge and technology due diligence expert, which is why we chose her for this topic. She holds a BS, an MS, and PhD degrees, and she's completed a fellowship at Harvard University. Noelle's presentation today will draw upon her rich experience to provide insider tips to help prepare SUNY entrepreneurs. As I mentioned, we'll conclude today's sessions with a dedicated time for Q&A. So with that, Noelle, take it away.
Thanks so much, Jeff, and it's a pleasure to be able to speak with the audience today from SUNY at various locations. To give you a little bit more background on myself, I was in a similar position to many of you who are on the call today. I was a faculty member from the mid-2000s to the early teens at Hunter College, which is a campus of the City University of New York, where I was a physics professor. And when I left CUNY, I actually went and started my own business, which, as Jeff mentioned, was Goddard Labs, where I had to figure this all out on my own of how you gain investor interest and how do you support the R&D that you want to do in your company. And at that time, I was working out of a Stony Brook incubator and was actually seeded by one of the institutions you see on the slide here, Accelerate Long Island, and now I have the opportunity to work with the second generation of the fund, which is the New York Seed Fund. So just a few moments to tell you about what Accelerate New York is. So as I mentioned before, Accelerate Long Island is our preceding fund. Accelerate New York Seed Fund is our current fund. Both are processes which actually are investing money from Empire State Development. The first grant, Accelerate Long Island, was actually a matching grant that matched private investments to fund 10 companies across Long Island and to also build an ecosystem of entrepreneurship to try to give universities like Stony Brook University and Northwell Health, which are spinning out lots of technologies, a platform to be able to support the companies that they spin out, as well as Brookhaven National Lab. The second version of the Accelerate Fund is called Accelerate New York, and that's actually an initiative called the Technology Commercialization Funding out of the state. We are in a regional partnership. Our region is highlighted on the bottom right-hand side of New York. It's considered the downstate region, which is Long Island, New York City, and the neighboring counties to the north. They allocated $3 million to specifically invest into early-stage businesses. Those are businesses that have raised less than $500K in dilutive investments, which is truly early stage, so it's nice that it was earmarked for that. And our goal is to deploy that in the next 3 years by doing 20 to 25 deals. And again, the infrastructure of this fund is supported by the parent nonprofit, Accelerate Long Island, and we are in limited partnership with the state. So to date, we've closed rounds with all the company logos that you see there, which to those of you who may know some of the companies, we are extremely biologically heavy in our investments. That's largely because in the downstate region, we have many biotech research institutions. We are just now starting to get clean tech and some other hardware tech into our pipeline, and we're looking forward to expanding that as well. And beyond this, we have 6 more companies which have actually received full approval and are actively raising their rounds. So without further ado, let's talk a little bit about giving pitches. So whenever you start thinking about building a pitch, the first thing you need to think about is who is the audience. And I think this is something that's not always so obvious to us maybe when we're coming straight out of academia, but we do it whenever we're tailoring courses for different types of students. So I happen to be an interdisciplinary researcher. I was in the physics department, but I taught courses also for the biology department. Obviously, you tune your lecture whenever you're going to be talking to students that have more or less quantitative skill sets in order that you can communicate clearly. And the same is true when you start thinking about the audience that you might be trying to reach whenever you are giving an investment pitch. So the first thing to think about is what type of investor are you speaking to? And it's very common that investment groups specialize in specific sectors for their investments. So I've listed a few examples here. So some investors are very comfortable and specifically work in the digital IT space. Some of those, but not all of those, may also work in actual technology, the hardware and instrumentation space. Very often, life science investors may be specifically life science investors, and you might actually see that they do not reach into the technology and digital IT space, but tend to stay completely in the life science sector. The reason for that is the complexity of the technologies they review, and of course there's many different subtypes, some of which I've listed here, like therapeutics, diagnostics, and devices. And clean tech, because it is a burgeoning field and has a tremendous number of opportunities these days, also tends to have very specialized investors. So the first thing that you want to do is to make sure that you're talking to the right type of people for the type of pitch that you're going to give and for the type of technology which you're trying to pitch. You don't want to waste their time, and you don't want to waste your time in terms of your pitch falling on deaf ears. So the second thing to think about is what type of investment group deals are they comfortable with. I've listed 2 very common types of technology categories here. One is called business to business. The other one is called business to consumer. This is something we see a lot when we're looking at medical technologies. So you can think of it like a business to consumer device is something which is like a consumer wearable, like a different version of a Fitbit. Whereas a business-to-business might be a medical meter that you intend to have working in a hospital where the company that you have actually ends up being, or the technology you have ends up actually being acquired by a larger medical device company. And again, investment firms have a tendency to have experts who are trying to gauge the risk of your deal based on their experience, and they tend to have experience in one of these 2 sectors, sometimes specifically in one or sometimes both, and it's very good to know that. So one place you can find this information is to go onto the investor's webpage and to start browsing their portfolio companies. Most will list their portfolio companies, and it's a really good place to start so that you can understand what sort of level they are in terms of sophistication of investing in your field, as well as the types of deals that they do. And finally, something that ties very closely to that is this idea of thinking about whether you're talking to an expert or a non-expert audience. Why this is important is because no one wins if this story isn't communicated well. So I always tend to err on the side of communicating the story to non-experts because it has been my experience that people who want to show off and to fight about details that they may know or posture about details that they may know will do it no matter what. It's so much more important that you, as the person who is pitching the story, is effectively communicating to everyone in the room. You'll have an opportunity to deal with somebody who wants to ask extremely detailed questions during the Q&A, and that's an opportunity for you to display your expertise. If you speak above your audience, you run the danger of constantly losing people, and people have a tendency to zone out. That's not something that you want to do, and in the moment that you lose an investor's interest, then they're just waiting for the next pitch to come by. So that's lesson number 1. Lesson number 2, which seems to be mislabeled here, is tune your pitch. So something which is particularly important is that now that you know that you have different types of investor audiences, you need to think about what type of pitch you're actually giving. So there are several basic types of pitches. People will often talk about a short pitch called an elevator pitch. So that's something that every company needs to think about building for themselves. It's basically an exercise to craft the mission statement of your company in 1 to 2 sentences. And the reason that people call it an elevator pitch is it should be something that you can effectively communicate in the length of time that it takes you to take an elevator trip. So this is not something that comes to everybody naturally at first. You'll be surprised how long you have to work on that succinct message. But when you tune it well, it's something that people can remember, and then it's something that they repeat to their colleagues. So it's something worth putting a lot of effort into. And it's a good exercise for you because it really helps you craft how you're going to communicate the bottom line to people every time you meet a new person and you have a business card exchange. When you start talking about pitch sessions, a lot of times people will give you a specific amount of time to deliver a pitch. That could be a 2-minute pitch session, a 5-minute pitch session, or something longer like a 10 to 15-minute pitch session. Very often with these pitch sessions, you are not the only company which is performing. So something you need to think about is what is the best set of slides to communicate in any one of these pitch formats. I've listed on the right-hand column my thoughts about what's important to communicate in each one of these types of pitches. So the 2-minute pitch, it's most important thing you can effectively communicate is the problem, the solution, and the market opportunity. This allows people to understand why you're trying to address the problem and what is the potential for making money and what's unique about your solution. That can be expanded by adding slides about your team, which certainly is a nice way to display your expertise, your development plan, and the competition space, which makes for a very nice 5-minute pitch. And then if you're given the opportunity to do a longer pitch that's 10 to 15 minutes, you can certainly do the full story, but you need to be sure that each slide counts. And what I mean by that is, again, it's really easy to numb your audience by packing too much in, and we're going to go over that in some of our upcoming slides as well. So again, what are some of the most common mistakes? As I just mentioned, probably the most common mistake people make is that they always try to squeeze in too much information. When you're given a short period of time to communicate, like that 2-minute pitch or that 5-minute pitch, the temptation is to put too much information on a slide. And it's really not good for investors because they just will glaze over. Instead, you really need to think about what is the best way to communicate your story in a succinct and memorable way, because you want them to leave the pitch session remembering who you were. Part of that is remembering to tune the deck for the audience, which we mentioned on the first slide. Investors always want to know how they're going to make money, when they're going to make money. And technically savvy audiences certainly want to know what differentiates you. But as I mentioned earlier, I think a really important exercise for you before you give a pitch is to research the firm that you're that you're pitching to. See what type of investors they are. See what type of investments they've previously made. Maybe the most important thing you can do to tune your deck is to make sure that your deck is speaking to the type of investments they make. So an example that I've spoken about here is the platform versus single asset investors. So it's very common in the biological sciences and sometimes also in clean tech that people are creating a platform, meaning that platform may have multiple products which are created by using the platform, as opposed to a single asset. So maybe in that case you're thinking about a company that's trying to sell a single therapeutic to address a single target. Different types of investors really specialize in those two different areas. It takes a lot more money to develop a platform and multiple assets. So there are specific investment firms which will have a tendency to specialize in that if that's the type of technology that you happen to have as an entrepreneur. Finally, focusing on the details of the product is something that we all tend to do as excited scientists who are trying to tell somebody how great it is that we've figured out this really interesting solution to an ongoing problem. But when you glaze over the business opportunity, it ends up being something that causes investors to believe that you're not serious about their participation in what you're doing. So they're investing in you because they're gambling on you being able to carry the product development pipeline from today to tomorrow for this much amount of money. And then if you hit your milestones along the way, their value of the company will increase, and therefore their investment was worthwhile. It's important that they see that, and what we'll talk about later is I think that the product development pipeline slide is actually probably one of the more important slides that you can pitch to early stage investors, because they're taking a big risk on investing in you today. If you've never had investment, they have no idea, beyond the fact that you have expertise and that you're showing that your science is good, that you're actually capable of implementing this stuff. So they're gambling on the fact that you can. And then in the case that you hit your milestones, it's all going to work and everybody's going to be better for it and the company is going to succeed. That's a lot of risk to take on. So again, try your best to close the sale, so to speak, by preempting that and showing the investors that you respect their participation in what's happening and that you know that they are now going to be partners with you as you go forward by contributing to your efforts and supporting your R&D. Okay, so now that we've done that, let's talk a little bit about what actually needs to go into a deck. So at Accelerate New York, we have a fairly rigorous front-end review process for evaluating the technologies and the business plans. And then we ask the company to construct decks which are according to a format for a 10 to 15-minute deck, typically 15, where the decks are somewhat standardized in structure. That way, whenever we're hearing multiple presentations in a row, that the investors who are volunteering to work on our committee know that every single deck should have these pieces to it so that they're not stuck on the fact that you didn't have a slide for your IP or that you didn't have a slide for your competition, et cetera. That's not uncommon when you're talking to early stage investors, again, because investors have a tendency to see multiple technologies in the same sitting. They want to have a little bit of a way to have a comparative standard. So I'm going to speak about each slide, which is bullet pointed here, one by one, and some of the things that you can do on those slides, as well as some of the common errors that happen on those slides. And I encourage you, after our presentation today, to use this deck as a sort of guidebook to refer back to and to use as a tool as you're crafting your own deck. That's one of the reasons that I've put so much text into this version of the deck, so that it should be there to help you. So slide one, which may be a no-brainer, should always be your company introduction slide, and it's an opportunity to also speak about the mission. So something which is always good practice is to try to create a logo sooner than later for your company. And again, this is part of people remembering who you are, and sometimes it's an opportunity to start thinking very early about branding and finding a logo that has something to do with what your product is. That's true also for the company name. All of these things can be changed downstream, but it's really a good practice to start sooner than later. That way people aren't just looking at a bunch of text on the screen. They're looking at something that has a logo associated with it, and they're starting to remember the logo. I think that the company intro slide is a really great place to brand a catchphrase, and that catchphrase actually is almost an abbreviated version of your elevator pitch. An example of that is the fact that, like, let's say that your company is focusing on creating a quick solution for some type of medical diagnostics problem. So you have the name of the company, and then after you say the name of the company, and you're like, we create rapid solutions for diagnostic testing in breast cancer. Something like that is an easy thing for people to remember. And if your company name has something to do with that mission statement, then the two of those things synergistically will sort of be burned into the minds of the people listening to the presentation, and will work to brand and help, the investors who are sitting there remember your pitch over other pitches. Of course, you can always tell a short anecdote about the reasons for starting the company. But as I've listed there in the common errors section of this slide, one thing that can happen is that if you're nervous when you start giving the pitch and then you start to tell a short anecdote, that anecdote becomes a long anecdote. And the next thing you know, you've burned, 2 of your 5 minutes on something which really didn't communicate much to the audience other than just your anecdote about first you starting the company. So that's the same is true with long introductions. So when you practice your slide deck, I would say work on trying to make this slide succinct. At the same time, it's very powerful because you can keep basically rebranding yourself slide after slide after slide with information you convey here. So the second slide, which is good to get out right in the front, is to talk about what is the problem you are trying to solve and how big is the market. So as I've been harping on for a little bit of our intro here, it's always a good idea to try to work on putting succinct text on slides. But the other thing which is really important is to start thinking about what images you're going to use. Very much like when you construct a publication for a journal article, some people even like to start with the figures and then build the paper around it. It's the same idea here. If you're going to show a figure, it has to be a figure that truly, clearly communicates what you're trying to say. And something that we see a lot as common errors are people just grab a blurry figure from the web. When it's blown up to presentation size, it doesn't look good. You don't want to look unprofessional. So take the time to make a figure rather than showing a blurry figure. The other problem that people have is they may have grabbed a figure from a publication that has 20 different labels or a tremendous number of data points. When you show something like that on a slide, people start to focus on trying to understand the labels or any other type of information which is cluttered around the image. It can be distracting, and then people miss the words that you're trying to speak about the figure. And again, the sort of mantra of going back to this time and time again across our talk today is that you have to really be careful not to drown your audience in information. And people often think if they show more background slides, it will be more impactful for people to understand the size of the problem. It's actually not. If you can spell it out in one slide, again, it's a good exercise. If you can do it in one slide, you are actually gaining a lot of impact because people can then explain to other people when they're wanting to talk about your opportunity what the problem is you're solving. They can't do it if you're trying to explain it in 4 or 5 slides. The same is true for giving a summary of the addressable market. The reason that I have this listed as slide 2-3 is that some people like to have a separate slide for market size if they feel like the market needs to be divided in different ways. If you have a particularly simple market you're addressing, you may want to put it on the same slide as the problem. But I think one of the, again, common errors that we see on this piece is focusing on the word addressable. It's very common for people to go out and grab a number from the web which is not the addressable market but the total market. So for instance, if you're treating lung cancer patients, you don't go out and grab the number for all the number of cancer patients across every type of cancer and then present that as your total market opportunity. Instead, you need to focus it down on who are the lung cancer patients, and maybe even within that, you only can address a subset of those. So take the time to try to break that down. It shows respect towards the investors that you know that the addressable market is truly the market which your customers will be in, and gives them more confidence that you're thinking about this as a business opportunity. Slide 4, the solution should follow, of course, the problem. This is a great place to show your product and to recap the branding that you were talking about on the first slide. This is a time for you to reiterate what it is, like either the product name or the one-sentence reminder of what it is that your product does. If you don't have an image of an actual prototype, sometimes you can do a mock-up figure or a schematic or something of that nature, just to give it a little hint of reality versus something which is just a text line. And it's often good to go on and emphasize, even on the solutions slide, what is the product's advantage over the state of the art. Sometimes a graphic can be very powerful in this aspect too, but what you're doing is that you're showing in one slide that this is your solution and your solution is better because, and you're giving it to them in a succinct message. Common errors is not clearly identifying the product. Sometimes this happens when people have platform technologies. They get muddled sometimes in the possibilities rather than what the first product will be. That's not a very good presentation to give to an early stage investor because they don't want to know that if you had $40 million pumped into it over 10 years that maybe you would get 10 products out. they're not going to be there for that length of time. They're typically there for a much shorter period, and they want to understand what is the first product, how long is it going to take to get there. So again, this goes back to tuning for your audience. And the other one is muddling the potential products with the first deliverable product, which can happen if people are very excited about the potential of a platform technology. So then we usually ask our people to present data slides. We are a technology-savvy group, so we have a tendency to want to get to the data first. Not every group really wants to see specific data slides, so this may be something that varies depending on who you pitch to. For us, we really we ask our entrepreneurs to focus on the best evidence that the solution will work. And again, this is more or less an exercise to think about constraining your data to a single slide. By constraining it to a single slide, you start to think, what are really the best figures to communicate the most important message that somebody needs to take home about the product today? Not what are all the other ancillary messages that they could have that would be supportive, but what are the strongest pieces? If you have a beta version or a prototype, then it's certainly a great place to show the performance specs. That's a very powerful thing for people who want to know that the product is real. If you have pilot studies or proof of concept data, it's another great thing to show here because everyone likes to see that the product has been put to use and has some external validation. And if you have customer feedback, because that's the type of product that you're making, where it is going to be consumer-facing or the customers are pain doctors or something and you've gone and you've surveyed 100 pain doctors, then put that customer feedback in this slide as well, because all of this goes to give the investors confidence in what you are doing and how much effort you have put towards de-risking the opportunity. Again, some common errors are showing data that's difficult to interpret or requires sophisticated explanations. This is not an uncommon thing. It goes back to what we were talking about earlier with figures. You don't want to take the most complicated figure that you can find in your latest Nature article and shove it in here and have to talk through what the different 20 labels mean on the figure in order that someone understands the importance of the figure. I think this also plays to labeling the data in a way that people can easily read. There's nothing wrong with taking a complicated figure, eliminating the larger number of labels, and only putting labels in which are important to understanding the story to simplify it for the audience. And of course, you don't want to show too much data or too many figures because it just numbs them. The next slide, which we often like to see, is an intellectual property slide. It's always good practice to list your patent filings and the status of each, whether you have a provisional or PCT or a search report or a national filing, office actions, et cetera. You should summarize what type of filings they are, whether it's a composition of matter or methods or utility, et cetera, and to define your licensing status with the patent's owner. So in this case, if you're a SUNY employee and you would like to go out and commercialize a product, you should be talking to your technology transfer office. And there's two common ways to go about this in early stage use. One is called an option, the other is called a license. The option is an option to license. It's a little bit less committal, but that's something that you can usually work out with your office under certain terms. So you need to be able to tell the investors whether you're under an option agreement or a licensing agreement to be able to commercialize the technology at the time you pitch. And also, if you have multiple filings that you're anticipating making over the next year, 2 years, 5 years, tell people about it so that they know that the patent portfolio is going to grow because this is a true asset of the company. Also explain with that whether those patents will be owned by your academic institution or shared with your company or owned solely by your company. All of that information is important. And again, a common error that we see often in our presentation is that our more sophisticated investors from the VC community often ask if the company has the freedom to operate. And many of our companies answer yes without understanding what the term means. I think there's some confusion, a common confusion, that freedom to operate means that you have an option or a license with your home institution to be able to work on the project. That's not actually what an investor means by that. What they mean is a formal study performed by a law firm, which shows that in the case that you get the claims that are filed within your patent, that you will indeed have the freedom to operate and to sell this in the commercial space without running into conflicts with other companies in the same space. Slide 7, we like to always have a brief summary of what the business model is. You can all think of this on how you make money. Questions which often get answered in this section are who's going to manufacture it, the cost to produce it, the price you intend to sell it at, and whether you are actually intending on building the company, whether that be manufacturing, marketing, sales, etc. And like we mentioned on the first slide, who's your customer? I mean, are you going to sell directly to consumers? Do you sell to distributors? Do you sell to other businesses? All of this needs to be there so that people can understand what you anticipate your customers are, who your customers are, as well as what your supply chain looks like. So this is a really great place to put a process flow chart because of what I just mentioned. If you have a number of goods that may be coming in from different places as you're part of your supply chain, map them out on a flow chart and show how much that costs going into your facility, which assembles them into a final product, and then how much you're going to sell that to what entities. And you, of course, can also highlight on each piece of that how you make money at each one of those flow arrows as well. So now I'd like to back up a little bit and talk about showing competition. This is really a great place to demonstrate your subject expertise. So as I mentioned at the beginning, one trap that you can fall into is that you have somebody who knows or thinks they know a fair amount about what you're pitching, and you're so desperate to make sure that they understand you're an expert that you're constantly engaged in this intense Q&A situation with them. I think that the competition slide is a really great place to be sort of proactive about talking about what you know about the area. So what it does is allow you to show that you have really developed a product which has a unique feature base which you think will be commercially successful and why that is. So one way people tend to do that is a table format, which is what I've shown here. They will list the features that they want to compare along one axis of the table. And then they'll list the companies or preclinical development, not preclinical, pre-commercial entities along the other axis. So that's denoted by us and them, and the features are denoted by the numbers. And then they put checks or X's in the boxes to determine whether they have the feature or they don't have the feature within their platform. So this is a great way to compare a lot of features on the same page, and it's visually quite appealing because you can see the green checks versus the red X's, so people can see that you have all green checks, so they know that you have all of these things that other people only have a subset of. But a common error that we still see not infrequently when people give us online decks is that they actually state they have no competitors because they feel like they're first movers in their space. It's actually somewhat of a red flag to investors. Every technology you invent has some type of competitor. It may be that the competitors are not within your direct technology space, but then you need to also talk about why it is that you believe yourself to be a first mover and what it is that differentiates you versus what is the common state of the art. It's a much more powerful message. And the other problem is that sometimes people choose a subset of competitors that don't directly compete with them in order to look good. That's also not a really good use of time. You should really try to tune this slide so that it becomes one of your most powerful slides in the deck. Another option is that if you don't have a lot of features you want to highlight, you could highlight on just 2 features where you believe those are the 2 most powerful features to demonstrate why your product is better. People tend to put that on a 2-axis graph. So now the companies, which are very often shown as logos, are featured as being in some quadrant of the graph, depending on how high or low they are in the feature which is being named. And again, if you're in one corner all by yourself, that's a way of visually highlighting that you're different than everybody else and that you've maximized 2 features, in this case, user-friendliness and cost. The common error is that sometimes 2 features aren't enough to explain why you're better, and then you find yourself over-explaining the slide, something that you also don't want to do. So in that case, I would recommend doing something more like a table format. Then the next slide we ask for is the development plan, and I have to say that for us, this is really one of the most important slides, and I think that's true for a lot of early-stage investors. It takes a while to put together because you really need to think about what are the major milestones that you need to hit that would be along the route to your product becoming a reality. And in our case, what we find repeatedly is that the best graphics display a timeline, the cost associated with milestones, and the deliverables with those milestones cleanly. And I've shown you an example timeline with just generic milestones on it to give you an idea how much you can actually put into one of these figures. So in this case, the blue arrows represent technical milestones. The reason for the two paths, the upper and the bottom, is because milestones 2 and 3 are happening simultaneously, not because it's necessarily a different trajectory. But what's nice is that it breaks out the milestones into categories that fit underneath different fundraising rounds. So if you're pitching to a seed investor and they want to know what milestones you're going to hit with the $3 million that you've proposed, you simply just have to look at the arrows that fall into that bracketed area. In this case, there's also separate lines for consultants, which have been color-coded, so it's a nice way, again, to highlight information and the differences between money that's going to be going to salaries and consultants versus money that's going into technical development. And also your rent and other things fall under things like G&A, so you could also break those out so that people understand what your operating expenses are, how much do you plan to give to consultants, and what sort of milestones you hope to meet in those various seed raises. I really like this particular example because it also has, in language below the timeline, a breakout in sort of common language of what type of deliverables you're giving. So that would be the value building event 1 and value building event 2. So at 6 months into it, the company is going to have better value because after reaching the end of milestone 1, they've done something significant. And maybe that's true also between months 12 and 18 when they finish the seed round. They will have completed milestones 2 and 3, and that will, again, make the company look more valuable. So that's a great way to break out a lot of data in a single figure, and it's something that communicates very clearly to investors that you're serious about mapping a path forward for de-risking the asset. Slide 10. After you tell them about your development plan, it's great to start talking about whether you have any traction with potential partnerships, et cetera. Again, investors focus on risk. So most of your early stage business development efforts should really be focused on ways to improve investor confidence. And by that, what I mean is if you're a very early stage technology, you think it's going to be great, and you can tell everybody it's going to be great, but it's a lot more meaningful if Intel decides that what you're doing is great and gives you $200,000 to do some pilot study. So many different types of confidence building activities exist. One could be customer discovery interviews. If you're making a lawn mowing robot, then you should go out and talk to people who would be using the lawn mowing robot, and or the companies that may be buying your lawn mowing robot to slap their label onto it, and documenting those as customer discovery interviews. An example I just mentioned is the idea of doing pilot studies. Certainly lots of larger businesses are now seeing that startup companies are a great place to start scouting out early R&D, and it's relatively an inexpensive gamble for them to decide to be a monetary collaborator. There's all sorts of deal structures which get set up for those types of collaborations, but we're seeing an increasing number of those in the city for both clean tech opportunities and pharmaceutical opportunities. So that's a nice opportunity there. Another option is to do external validation studies. Some investors are always a little weary that stuff only works on the laboratory of the inventor and not necessarily when it goes out into the real world. So sometimes you can mitigate that problem by having an external validation study performed. And again, as I said with the strategic discussion, having the confidence of a larger company that sees what you're doing as an important thing in the space and has decided to fund you or to commit to fund you if you reach a certain milestone and provide a letter of support, those are all activities which build investor confidence and show them that other people are interested in your opportunity and that this could be a real business. Of course, the error here is that you could oversell your progress and then the investor keeps coming back to you 1 month, 2 months, 3 months down and asking you, where's the Intel deal, and you don't have it. And that can be a double-edged sword. Of course, you always need to present your team. It is a big part of what early-stage investors are investing in. It's your team and the team's expertise in order to support the early de-risking that's necessary for the company. It's a really great practice to put headshots in. It's very humanizing, so everybody sees the larger team build up. It's also important to investors because usually it's only 1 or 2 people at most who are pitching the team at the time of the pitch. Something that we like to see is that their most relevant experience is listed below their photo if you're going to list anything. We often see that people try to bullet point everything that anyone's ever done underneath their photo. Think of this much more like the exercise that you do whenever you're submitting a journal publication and they ask you, what did this person contribute to this article? Or if you're submitting a grant application and you have to give your expertise in the first section of your biosketch, what are your expertise directly related to this project? That's exactly the same type of exercise you want to do in terms of finding out which information is most important to convey about your team. And I do think it's nice to have something underneath people's photos, largely because some people are visual learners and like to see the words. Other people are people who want to listen to you speak about the person. So another thing we like to see sometimes is if you have a very small team, as in 1 person or 2 people, and you actually have a hiring plan of more scientists or engineers or other people that you want to bring on board or advisors, feel free to show it. You can show it in a very similar format to the type of arrow diagram that I showed in the development slide, or simply give a bullet point list. But this is a great place to show your hiring plan so that people know that you have an intention to expand and these are going to be who supports the technology. And of course, you can always end up spending too much time on this slide because all the people you know have all these expertise, and it's just like the introductory slide. You can end up losing some time here. Slide 12, we always like to throw in an extra slide for people to be able to highlight things which aren't in the main deck. Sometimes people have press, could be press from your institution which highlighted the technology that you're spinning out. Could be something that was highlighted on a journal article that you published and the journal followed up with you. Or any type of press that you might have, this is a great place to show it. Certainly any new or anticipated members of the scientific or business advisory teams should be put into this area, or awards and prizes which you might have gained in pitch competitions or something like that recently. Sometimes investors like to see that you've participated in business mentoring programs if you're a pure academic. It's also a great place to put it here. And if you have a physical location where you have actually established your company and you've taken the effort to build out there, then it's great to show it here and to also talk about company relocation if you are going to another place. It's good practice always to use logos of the organizations to highlight awards and people who are supporting you. They like the advertisement and you always look good for using them. Now we get to the funding stuff. So it's certainly always good practice to show your progress in acquiring funds. Investors need to know how much money has already gone into the company. So you really need to list all of the different sources. And I've listed a few types here. Typically, founders contribute something. When you accept money from your founders and or your friends, you need to decide whether that is an official equity investment or not. So it's better sooner than later to talk to a corporate attorney so that you can actually know what you're doing and to legally give people the shares that they deserve, or to not have a share agreement if that's the way that you prefer to do it and the way your family prefers to do it. So that's something to think about. And then, of course, there's the standard non-dilutive and dilutive funding, meaning grants or investments. And it's a great place to also talk about anticipated funding, particularly if you're applying for more grants or small business awards. And what we often like to see, it's something that I always think is a nice place for a reminder, is this is a good place to remind the audience which milestones that you want to accomplish with which sets of funds. Like if some of that funding went to de-risk different milestones in the development plan, this is a nice place to reemphasize that. And because you're asking for money, you need to obviously talk about the proposed use of funds. So you need to explicitly give an amount. If this is your seed fund raise, then you need to actually state how much that is and which deliverables that you intend on completing with that money. A very common error here is that people just put a number on a slide and they don't necessarily define the budget and the milestones. It never hurts to repeat information. People have been focusing on your talk and a lot of slides. They don't want to have to remember what you presented, 6 slides ago. They'd like to be able to see it here. So certainly defining clearly here what it is that's going to be delivered is useful. Another thing that can be a little bit of a double-edged sword is that when you decide to ask for money, think very carefully about the amount that you're asking and whether that's something that you feasibly think you can raise. If it seems like an inordinately large number, think about if there are ways you could break that into pieces, where, again, the outcomes of smaller fundraising efforts would still be meaningful in advancing your company forward. Investors often will ask, how are you going to raise the rest of the $1 million that you're talking about? And if you just say, I'm going to pitch to investors, it's not very confidence-inspiring. If you say, well, if I can just make it through this next milestone for $300K, the company will look very different, then really what maybe you should be talking about is that $300K is the real first number. And if you are successful there and it demonstrates your value proposition, then after that you could raise something that might be another $1 million on top of it to reach the secondary goals. So if all that goes well, then hopefully you'll be talking about the deal. So when it comes to your investment, there's a number of things that will come to you, very quickly, and things which you need to have legal teams in place in order to discuss and make sure that you're signing proper agreements. So investors will typically give you a term sheet that is a document which proposes a set of deal terms for the investment that they propose to make. There are a number of things on that term sheet, depending on what type of deal it is. I've listed several common structures for these deals, the convertible note, the safe note, and direct equity. These are all things you can look up online, but for early-stage investors, they tend very much to stay with convertible notes or safe notes. Safe notes are a little bit more common on the West Coast than they are here. They were invented by Y Combinator. Convertible notes are a little bit more common here. Sometimes you see angel groups that want to do direct equity investments, but it's not all that common. Again, depending on who you're pitching to, it's good to know what type of structure they use in order to invest, and that's something you should feel comfortable asking them when you first have your meetings with them. Valuation, very often they ask for a pre-money valuation. That's the estimated value of your company before the investment. This is something which changes constantly after you're raising money, and it's something that you need to keep track of along with the percentage shares of different investors, which is usually called a cap table. A very common error in this particular part of the deal is that people go out and try to find a way to estimate their valuation, and they start thinking that because you've had $10 million in NIH funding, that therefore your valuation of the company must be at least $10 million. That's not how investors arrive at those numbers. So you should familiarize yourself with how that all works so that you aren't giving a number which turns off an investor and then they don't treat you seriously. Many of the companies we look at in the early stage technology space have pre-money valuations between like 1.5 and 10 million, and that's almost entirely determined by their stage of development and how much the anticipated overall development path will cost in order for this product to get to market. So our particular webinar today is not focused on the deal, so I'm not going to spend any more time on it. I'm actually going to finish and ask if anyone has any questions that could be answered, but I very much enjoyed the opportunity to share some of this information with you, and if you have questions, please ask them now.
Noel, thank you. That was really an awesome presentation, and as you promised, you not only spoke, but you provided us with an excellent deck in terms of reference points and common errors, so thank you. I know that the SUNY campus colleagues on the phone will be able to refer to this in the future, and, just listening and sort of channeling some of the themes that I took away from your discussion, things like making every single slide count, that each one has a purpose, a mission, and should accomplish that. Simple but powerful things like, the importance of images and how they can convey so much of what you're trying to get across, and the importance of being succinct and using few words that are well chosen. I think, just you've given us a great roadmap for how to do this right. So thank you. And
My
with
pleasure.
that, yeah, thank you very much. So with that, folks, this is a chance really now for you to ask questions, to interact with Noelle, and we're going to open up the phone lines, as they say, so you can speak your question. You can certainly type it in as well, and Noelle and I can see those. And maybe to get us started, I guess I'd pose a question. So thinking about how important it is to do this in a really planful, thoughtful way, Noelle, have you seen that folks who've done this well have taken advantage of any outside expertise? Have they hired a graphic designer to help with imagery or creating a deck template? Do they work with a writer or some kind of a content reviewer to get any of the verbiage correct? Or is none of that necessary? Is it just really important to follow the basics? And can an entrepreneur do this really on their own without that support?
It's a great question. So first off, I think any entrepreneur can certainly do it on their own. I do think an important message that I should share from my own experience of building a pitch deck for the first time coming out of my academic post is that I was surprised at how often I revised it. I think that it's great to go out and to grab a template, something like what I presented today, or there's other versions which are certainly online if you Google them, where you can start constructing a deck with the slides and what you want to show in those slides. But I think perhaps the most important thing you can do is to start pitching it to people who don't know what you do and see what their feedback is. So, find some colleagues which don't know necessarily what your expertise or focus area is, and see if you can explain the story well to, again, non-experts. It's a great way to get feedback about what it is that you think you're communicating or not without having to pay someone. In terms of do we see people who have professional decks? Absolutely. It's mixed. I think that often when people are just out of academia and they're spinning out their first company, the decks tend to be made by the scientific founders. But when we see decks which are being compiled for people who are selling directly to consumers, they often will actually go and hire professionals to sex up the deck. So that there's really beautiful imagery and custom icons and high level of branding and imagery in each one of the slides themselves. So we haven't seen a lot of those, but certainly it's almost been exclusively on the direct-to-consumer technologies. Also, if you're doing something that's doesn't require animation to show the device, but is bettered by showing a movie. We've seen people who have worked up some very sophisticated animations in movies in order to show what their platforms do. But again, I don't think it's necessary on the front end to gain an investor's interest, but the more polished the deck is, certainly the wider audience you reach whenever you go into these professional environments.
Sure, thank you. That's very helpful. All right, so let's open it up to our campus colleagues on the phone. Again, either just speak your question now or type it into the chat function. What thoughts, comments, questions do you have for Noelle? See someone raising their hand via the chat feature, so let's see if we can make that work. I don't see the question, so this is the participant with the first name Farah. Do you have a question?
Yes. Hi. Can you hear me?
Yes.
Yes.
Great.
Go ahead.
Thank you. Thank you so much, Noelle. This was a great presentation and put everything in perspective. Is there any way, this is being recorded, would it be possible to present this to my other colleagues later on? Do we get a copy?
Yes, he's going to. So Jeff is going to send you a link, and you're more than welcome. I mean, all these slides are public. We're very comfortable with that being the case.
Great. Thank you so much.
My pleasure.
Yeah, so just as Noelle said, we're recording today's session, and we'll make the recording available. We'll make the slide deck available certainly first and foremost to each of you, the participants, but, again, to the extent you want to share it with people at your campus and use the materials as you're working with entrepreneurs, this is a great reference, and Noelle is very generous to provide this to us and to the SUNY family. So thank you again for that.
Big fan of SUNY.
Yes, thank you very much. You're a great partner. Hey, so we've got time for a couple more questions. Anyone else have a question? Go ahead. Now's your chance. See Jeff and Scott and Ross and lots of friendly names here on the screen. Any of you folks have questions for Noelle?
So you should also feel free, Jeff can obviously share my email address as well when he sends out the information. If you have follow-up questions that you think of later on today or as you're reading through the deck again or listening to the presentation, please don't hesitate to reach out. Accelerate New York is very comfortable with its economic development mission. We certainly love to see technologies being commercialized from all of the research institutions in New York. And we're very proud of the fact that New York State is partnering in a way that's supporting early stage growth, which has been something that we've been missing as an ecosystem here. So it's a great opportunity to start companies now, and certainly there's more money in the ecosystem than ever before, so we're more than happy to assist you as you're trying to do those things.
Well, thank you. We'll do just that. And you reminded me, I know some other presenters have commented to me that they've gotten a number of kind of direct questions and follow-up from participants after they spoke. And some folks, frankly, are more comfortable posing kind of their situation directly to you. So thank you for offering that as well.
Of course.
So folks, with that, again, being respectful of everyone's time, including Noelle's, it is 2 o'clock. So with that, we're going to conclude today's session. Thank you to each of you and to Jamie, my partner here, helping to run the whole process, and most especially to Noelle and her team for making time today to share some of their inside tips with all of us here at SUNY. With that, folks, thanks so much. Have a great day. Take care.
Thank you. You too.